I'm Tom Moul, Director of Strategic Tax Services at Stambaugh Ness, and the purpose of our videos is to bring you innovative ideas that you may not have been aware of or thought of before that can bring tax savings to both you personally and your company. Today's topic is something known as the IC disc, and it's, for those of you who have foreign operations and export revenue, and here to talk to me today about this concept is one of our tax managers at Stambaugh Ness, Mike Wilhelm. So Mike, welcome.
Hi, Tom.
And before we go too far, I suppose we should just explain to the listeners what IC disc stands for and in a little bit more detail why they might be interested in it.
An IC disc stands for Interest Charged Domestic International Sales Corporation, and it's a tax strategy available to companies with exported goods or services that are produced here in the United States.
And when you say foreign countries, I think sometimes we get the in our minds that that's somewhere far off, Europe, Asia, somewhere like that. But we're talking about if you're just shipping or performing services in Canada, the Caribbean, and some of our close neighbors.
Absolutely.
So could you explain a little bit more what goods and services might qualify? Do I have to be shipping it directly to the customer in Canada or Mexico or wherever, or are there some other options on that?
Well, this is where it can get a little bit more complicated, but to keep it simple, if you're manufacturing, growing, extracting a product, and it's going to a different country, it's probably going to qualify. On the services side, if you look at architects and engineers, if they're providing a service for a project that's going to be constructed in another country, those are the type of services we're going to look at for qualification. The key note there is you don't necessarily always have to be the direct exporter. You can work through a distributor. If you sell to a U.S. company and they eventually send your product elsewhere, those sales would also qualify.
So interesting. If I'm just a component of the finished product and I'm sending that to someone domestically, I still might have some interest here. So if I am one of these companies that have my product going either directly or indirectly to a foreign country, why would I want to consider the IC disc? Well, what's it all about? What's in it for me per se?
So the IC disc provides the opportunity to change income classification. We can take ordinary income and turn it into qualified capital gain income. So if we look at the individual tax brackets, highest tax bracket is 39.6. We can turn that into 23.8% taxable income. If you look at a C Corp, we can remove double taxation. So it can be extremely powerful there as well.
So we've got some pretty significant tax savings there. Is there, as a general rule of thumb, a minimum level of sales before I would want to start thinking about this tool?
It's a very common question, but we like to say we want to be proactive here. We shoot for $1 million of export sales to make the IC disc a benefit, but it could be lower depending on profitability. But we need to stay proactive and make sure this is in place before sales reach the $1 million threshold.
So being proactive is very important. Obviously, planning is a key component of this. If I think I am nearing that threshold or I've got some future plans, can you talk a little bit about what I need to do? What are the mechanics of putting the IC disc together?
What we like to do is we like to start out by taking a step back, really understanding the goals and objectives of the business owners, and utilize that to help us decide how we're going to structure the IC disc, because there are some options there.
Have you run into any examples maybe of something unique we've done to maximize the benefits?
I'll give you two examples here. The first one is estate planning, and we have the opportunity here to potentially get kids involved, other family members, even non-family members, and change that classification of income and make the spread even bigger. The other one that a lot of people don't think about is ESOPs. We talk about ESOPs being a non-tax-paying entity. However, an IC disc is a non-tax-paying entity as well, and yet they could use the IC disc inside an ESOP to have tax savings. It's very unique when you get talking to people about it, but there are opportunities.
So Mike, you've talked about a couple of ideas there, and to the listener it may sound complex, and it certainly is. I mean, as with anything tax related, there are some complexities, and I think that goes back to your prior point that planning is so important, and having qualified advisors working with you is so important. I think folks maybe want to give this a second look, kind of help someone work them through the complexities, and get to that point where really putting some significant dollars in their pocket. But can you just give me a little overview of how you would calculate the benefit?
So the way an IC disc works is the operating company will actually pay a commission to the disc, and that commission is calculated one of two ways, and a combination of the two. First is the 4% of export sales calculation, and the second is a 50% of taxable income calculation. So the operating entity would take an ordinary deduction, the IC disc pays no tax, and then they would issue a qualified dividend subject to qualified capital gain rates.
So maybe if we could put some numbers to this, and again, I know we're in generalities here, but if my company had approximately $2 million of foreign sales, and I did it, the basic way, getting my 16% benefit, can you give me an idea what the savings might be?
There's obviously a lot of variation in the savings, but very basic, $2 million, 4% calculation on that, you're going to look at about $13,000 every year of permanent tax savings. And the key point is here, we like to say it's permanent tax dollars. It's not deferral of tax, it's not a deduction. So many strategies out there are really focused on deferral of tax to a future year, accelerate those deductions this year, we'll pay the tax later. The time value of money doesn't pay for that as much these days. Interest rates are still very low. And on top of that, so many advisors are out there always looking for the maximum dollar this year, and they might not be taking advantage of the lower tax brackets that are available. So you really got to make sure your tax advisor is looking at all these strategies and maximizing your taxable situation.
So there must be some other complexities and some costs to setting this up. What do we usually look at, and not only the steps in setting it up, but the expected cost?
Right, so when we look at the cost, we like to look at it as a return on investment. This is a strategy we're putting in place, is not a compliance type issue. So initially we're going to have some costs to set up the entity, and then we're going to have ongoing annual compliance costs with a tax return. But those are pretty minimal. Any additional costs are going to be for maximizing that benefit, and those benefits will always exceed the additional costs that are going to be incurred.
That's great information, Mike. It certainly sounds like this is an attractive planning strategy and something that maybe some folks should take a look at who haven't considered it before. Before we wrap up today, are there any other parting words you'd like to share with the folks?
I think the key point is to be proactive. If we're not proactive, we're not going to capture the benefits. The one thing we hate to see is when we go into a prospect and we identify the opportunity and we say, hey, the past 4 years you could have had $100,000 in your pocket. And that's a message that we don't want to have to deliver. We want to stay proactive.
Yeah, absolutely. So very wise words, Mike. I think if any takeaway here today, being proactive and doing your planning is very important. So I thank you for your time today, and I thank everyone for their time in joining us for today's video. If we've piqued your attention, you think you might be a good candidate for the IC disc, we're more than happy to talk with you. There is a link on your screen for a short survey that'll help us determine whether it's a fit for you or not. If you would take the time to just fill that out and send that back to us, one of our professionals will be in touch with you to talk about how you might benefit. Thank you.